Good morning, traders. We've had some posts in the room since 6:30 or so this morning, trying to give you a heads up on what I was seeing. Said make sure you are paid pre-market. A 72 to 75 zone, 73 and a half was a target that we had posted, and the reason why, make sure that you get something out of this swing short side if you have played. Reminder that this is a risky business, and anyone who is trading should think of this as risk capital they can afford to lose. Please review our disclaimers and disclosures, and understand that you are responsible for your own trading and your own results, and make sure that you treat this appropriately as a risky business. Don't forget, we've got a presentation tomorrow, 4:15. Anyone would like to come and take a look at what we're doing, love to see you here. There's a hidden pivot that we talked about at 73.5. We were looking at the overnight range. We had said yesterday 38 was support until broken. If you do the math, that's a pretty good poke from 38 up to almost 88. So risk and reward, just educated guess. Say, why not take a shot at something short side and backing and filling pre-market? And our pre-market target was 75 to 72. 71 and a quarter should play a role today. Want to be out ahead of that, taking some profits from the overnight swing. We'll take a look at a couple of reasons why. Here's a 30-minute chart. And we talked yesterday about this 28 support, and then we jumped it up to 38, which of course is the year middle. And it should not escape you the fact that we've also been able to come not quite 100 points away from the last year's high on a bounce. But we certainly have come up to that 78 target that we had talked about yesterday, which I said was destined. I did the math on it, and I said, okay, that's their next target, 78, and whatever they get above that, good fortune. But I felt that it should stall someplace ahead of obviously the next biggie, 2,800. And I don't want to assume the high is in, but I also don't want to presume that we can just float up there easily without doing some backpedaling either. So I think right now is probably a good time to be sidelined. If you've had a good run short side, let it create a little range, and then we'll see if there's something that makes sense. This is a 30-minute chart, and we can easily see how that has adhered from the 5th to staying above the rain line and the green and the red and the blue. And every time it's come back towards this blue line, it's kind of pushed forward. And that's typically what you try to do in a trend move, is buy the blue line. And then if you're a hit and run type trader, release it, and then on pullbacks, you can try it again. Position swing traders are just going to hang on to it, and they're going to add position at these blue lines. Simple as that. And obviously this is a retest, and I said that earlier. Remember the original 74 high overnight? This is a retest of that area. Kind of an important consideration usually when we come backwards. So you want to get paid by this retest, because there are traders who are here that really got beat thinking that was it. And then all of a sudden they get dragged up here. So I'm looking at this more as that range for now. And in strong uptrends, you can buy pullbacks, and if you're wrong, just get out. So we said let's use 72 as our support for anybody that wants to scalp long side with the trend, assuming it might be profit taking from these traders ahead of the open. And that's sequence trading, simple as that. If you are a conservative trader and you've already made something pre-market, there's no need to do anything right this minute. If you didn't play at all pre-market, there's still no reason really to get involved right here. I think we're going to have some backing and filling, but I also think the possibility is that the high is still not in yet. And although that's, I'm giving that a 50-50 uh, possibility, just because they can knock out the stops before they come backwards. So anybody that is buying up here for the long side, 2-point stop, that's it. Don't give it your whole body. Give it your fingernail or your finger, but you know, the temptation is so great to just close your eyes and say, got a short and we're going to plunge. I don't think that way. I don't think we're going to plunge. We've got rising moving averages. I would like to see some pullback, but I'm not thinking plunge. And for now, we're going to take a look at that 30-minute chart. And I'm going to reduce that to a 5 or a 10 or a 15 and give us a little bit more information. So anybody that wants short side, we're using the 92 stop. We're using the 85 as a resistance zone because it is the demon. And I'm not thinking a big range. So second cup of coffee for those of you who want to wait a bit. And reminder, the game is to put some, chips in our pockets, not to guess every little wiggle. This is support clearly back down here from overnight. This is yesterday's high at 61, and so these lows right in here are the key. So 58, we said if you want to call it 60, that's clearly support for now. And anybody who buys MATD, I'm suggesting that we've already had morning after trend day, so we don't have to take out the high. And it wouldn't surprise me, but we certainly don't have to because we've come a long way already. Above and beyond yesterday's high. So I'm going to think about this as bounce type trades that will, even if we take out the high, may be subject to failure before we're done and come back and fill. And that's just the conservative nature of the way I look at it. 72 support, 71, 72. If you can get by that, then the door opens back to come back and test a little bit lower. And I think we've got two-way day just because of this setup.